Good morning. It's Market Day Report. So glad you're with us as we start the trade here on a Wednesday. Actually, we'll open up day trading here in about 12 minutes. So overnight, what happened? Let's go to the corn market. And the overnight action was mostly lower. The December at 402.5, slipping 3/4 of a penny. And the bean trade in the overnight session down 1.5 pennies. The November new crop 10.32 1/4. Let's hit the wheat markets quickly. And first, Chicago 3.5 higher at 5.02 a bushel. Hard red in the overnight session up 1, trading just above $5. And spring wheat higher across the board. Cotton market overnight 22 higher, 67.78. He's the president of Midwest Market Solutions. It's Brian Hoops. All right, Brian, we start the morning. Can we say flash sales again?
Well, yeah, we've got a couple to sales to pass along. It's corn once again, 100,000 metric tons for delivery to Colombia, and then about 126,000 metric tons of corn to Mexico. So Mexico continues to be by far and away our best buyer of corn, and we're seeing another week of very strong export sale announcements this week. That means next week's export sales report on Thursday will be very strong once again. Our new crop sales pace is off to a tremendous start. We've seen some old crop being rolled out into the new marketing year because of big loadings coming out of Brazil. There's a huge amount of ships loading corn to be shipped in the world marketplace. But that's here for the summer months. These purchases that are being done now are actually for later this year for delivery. And we're going to see some strong export sales announcements tomorrow. Our pace is probably at least double of a year ago level. So USDA is forecasting record amounts of exports this year. We're on pace to do that so far this year. Now, a lot of the focus has been on the Pro Farmer Tour that's ongoing, and rightfully so. There just isn't much else to talk about. But if you look at where the corn market has gone in the last 24 hours or more, it's gone absolutely nowhere. Yes, there's big yields, big results coming out of this Pro Farmer Tour. But so far, out of the 4 states that they've conducted tours in, yields have actually come in below what the USDA has forecast last week when they updated their USDA supply and demand numbers. South Dakota is the only state that came in above the USDA. 174 bushels an acre is what they said for South Dakota. USDA says 168. The other states, Indiana, Ohio, and Nebraska, USDA has yields actually larger than what the Pro Farmer Tour is uncovering. So, Pro Farmer may not be completely accurate compared to the USDA, but it is interesting that maybe our ideas that the USDA overestimated yields in last week's supply and demand report are kind of being confirmed by what is being found out in that Pro Farmer Tour.
All right. Hey, Brian, can't wait to get your insight on the livestock markets. Had another record-breaking day yesterday. We'll find out more as Market Day Report continues after this. All right, let's talk some record-breaking markets. And before we get to that, and Brian Hoops, here's how we finished the session yesterday. Live cattle futures down 42 on the front month, but October up 12 at 231.30. The leader here was February at 235.95 on the high end. Feeders, this is where we saw a record-breaking 354.55 on the September contract. and it settled, what, $3 lower? $3 lower than the high at 352.45. It was still $1.50 higher on the session. And then the hogs lost a 2-day win streak, falling in the trade yesterday. Brian Hoops, Midwest Market Solutions. Brian, is this cash? I don't guess it would be cash related. It's probably more related to box.
Yeah, boxes have been red hot, and it's really restored Packer margins. It wasn't too many weeks ago I was on here, we were talking margins negative $300 a head. But with the big jump in the boxes over the last 2.5 weeks, now we're about $53 to the positive. So Packers really have gained their margins back. But certainly it's because the cash market hasn't moved up, and it's because the box values have. They've really increased over the last 2 weeks, almost $30 in the choice and about 26 in the select over that time frame. So where do we go from here? Well, cash is called steady again this week. That's why August futures they're already premium with or on par with last week's cash trade. It was in that 235 to 237 range. We're trading 236. There's really no reason for August to move sharply higher unless the cash moves higher. But yet you see the deferred contracts moving higher in both the live cattle and feeder cattle. And even though we're hitting new all-time highs in feeders, a lot of it is short covering, it looks like. Open interest is declining on this rally, indication that shorts are moving out of the way of some of these short positions, buying those back, not new positions being added. And that's not necessarily bullish, neither is the fact that the deferred contracts are leading the market higher. So that doesn't necessarily give us a lot of confidence that we'll be able to sustain these gains, but yeah, who knows? It's just kind of a runaway market. Maybe some of these auction barns, if they start to soften up, we'll get a correction in these feeder cattle futures.
Yep. Brian Hoops is with Midwest Market Solutions. We'll hear from you on the radio side later today. Brian's on Sirius XM Rural Radio 147.